Good morning, everybody, or good afternoon, wherever you're joining us from. We're very pleased to have you at another session of Discovery. My name is Alison Mostowitz, and I'm the Director of Engagement at Energy Efficiency. I am joining you from Calgary, Alberta, home of the Blackfoot Confederacy, the Tsuut'ina, the Stoney Nakoda Nations, the Métis Nation Region 3, and all the people who make their homes in the Treaty 7 region of Southern Alberta. And while we are a remote workplace, Efficiency Canada is based at Carleton University, which is located on the traditional unceded territories of the Algonquin Nation. So before we get started today, just a reminder to everybody that our guest speaker will present for about 20 minutes, and then we'll open the floor to questions. So you'll see a little box at the bottom of your screen that says Q&A. Please use that to put any questions you have in there. You can actually upvote the questions as well. So if you hit the like button, we'll consider that an upvote. And the more questions that get likes, the more propensity there is to ask it. So with that, I will introduce you to our speaker today. So today we have with us Aaron Berg, who is the Director of Energy Efficiency Investments at the Canada Infrastructure Bank. So he's here today and he'll share some lessons and existing challenges from the emerging decarbonization retrofit market, as well as CIB's role in the sector. So thank you so much, Aaron, for joining us.
Thank you, Allison. Glad to be here. Should I share my screen?
Yeah, go ahead, share your screen.
Okay.
Hello,
everybody. As Allison mentioned, my name is Aaron Berg. I'm Director of Investments at Canada Infrastructure Bank, and I lead our Building Retrofits Initiative. So today, I thought I'd give everyone a quick overview of the Canada Infrastructure Bank, and then a little bit of an overview of the Building Retrofits Initiative, and finish up with some lessons and challenges that we see in the sector. So here's an overview of the mandate for the Canada Infrastructure Bank. We are an impact investor trying to make investments in projects that are not happening, are stuck in with some type of challenge or gap to the benefit of all Canadians. We have 5 priority sectors at the bank. Public transit. So we've been making investments in zero emission buses, financing the replacement of gas and diesel powered buses. Clean power sector, where we make investments in clean power generation, transmission, broadband, where we're trying to provide high-speed internet to all Canadians, and then trade and transport. And then in the middle, you'll see green infrastructure, which is where our Building Retrofits initiative lives. We've entered into approximately $10 billion of investments across the country. You can see the red dots across the country for project locations. And total capital value of 28 billion, I think, is an important thing to just discuss quickly in terms of we are always looking to work with private sector, crowd in private capital, and we can do that by taking certain risks and offering certain flexibility with our investments that create greater certainty for other investors to get them in making investments that they otherwise might not make. This is a little bit about some of our key metrics. So when we do invest for impact, we try to quantify the impact of the metric. So the metric for the Building Retrofits Initiative, for example, is tons of greenhouse gas emissions reduced. We do that in a couple ways. One, we measure the actual quantity of tons that we can eliminate from buildings. We have a minimum 30% reduction for a project to qualify and be eligible. And we also measure the dollar per ton of investment, really trying to make sure we're getting good value for money with our investment. So the Building Retrofits Initiative, we launched the Building Retrofits Initiative almost 3 years ago. I think it was March of 2021. And that came on the heels of a pretty thorough market engagement process where we talked to building experts, real estate owners, finance professionals to assess why weren't deep decarbonization retrofits simply happening on their own, and how could the Canada Infrastructure Bank develop an initiative to help make more decarbonization retrofits happen. So, as I've mentioned, we are investing in the decarbonization of buildings, and we try to provide flexible and attractively priced financing to achieve that. And we work with both the public and private sector, and we are making investments and loans that need to be repaid through the cash flows generated from energy efficiency and decarbonization. The way we deliver our investments, we have three predominant structures. The first is fairly simple, direct investments with real estate portfolio owners, where we can make balance sheet loans to corporations that hold assets and are looking to decarbonize a portfolio of buildings. We do not make investments as a matter of policy any longer directly into single site projects. One of the reasons is we are trying to scale and we don't have the organizational capabilities to be doing lots of transactions. As you can imagine, as an infrastructure bank, some of our investments are in the billions of dollars, and we are capitalized with $35 billion. So we typically at the bank have a $100 million minimum transaction size. We relax that to 50 million for the Building Retrofits Initiative. When we launched, it was 25 million. So some of you that are familiar with the history of the initiative may wonder why it's now 50. And that's just a function of having been in market for 2.5 years, and we're trying to prioritize larger portfolios. The middle box is what we call our aggregator approach, where it's founded on the principles of project finance. There will be a special purpose vehicle that gets created. We lend money to that special purpose vehicle alongside private equity at a now maximum 70% ratio of the total project capex. Some examples of that you may have seen are with Sofiac out of Montreal, Johnson Controls, and Ameresco. The third box represents a more recent deal structure type. We entered into a partnership with the Bank of Montreal under what's called a participation agreement structure, where essentially Bank of Montreal is delivering our capital into the marketplace for decarbonization retrofits, for the construction and commissioning of the retrofits, and then BMO replaces our loan with a conventional commercial real estate mortgage. So what is a decarbonization retrofit? For many of you on the call, if you've been in the energy efficiency industry for a while, the way I like to think about this is that the bottom of this slide, the red portion of the pyramid, is your classic energy efficiency retrofit that addresses the building envelope and the mechanical equipment within the building. Whereas a decarbonization retrofit can also include, under the Building Retrofits Initiative, on-site generation, on-site storage, and EV charging, where we're really focusing on the readiness of the building to be able to accommodate EV charging, not necessarily the individual chargers. Those can be rolled out over time as there's demand, but what we found is that often the impediment to installing EV charging into larger apartment buildings or whatever is the electrical service coming into the building. I mentioned once already Ameresco. I just have a few examples here of the investments that we've made so far. So Ameresco is in market offering a no money down turnkey decarbonization retrofit solution, primarily to the light industrial sector is where they've been focusing. Dream Office REIT, we closed a direct investment with Dream, where they are going to implement decarbonization retrofits and building upgrades to 19 of their buildings. And Toronto Western Hospital Retrofit is an investment with Noventa Energy Partners and somewhat unique technology of basically a sewer waste heat recovery system as the primary mode to decarbonizing the hospital. We've also entered into an aggregator investment with Noventa, where they will be offering this to other institutional clients like hospitals and universities. So some lessons and challenges that are seeing and encountering in the marketplace is that I think first and foremost, the demand project development of retrofits is still relatively slow. I think how I would best characterize this is that there seems to be lots of interest, enthusiasm, curiosity, exploration of the potential for decarbonization retrofits, but there's not yet what I would consider to be robust demand, organic, robust demand in the marketplace. I think I've heard some instances of maybe some people, even with our investments, the no money down, being paralyzed that the offer almost seems too good to be true. So people wonder if it seems too good to be true, what's the catch? Which is an interesting dynamic in the marketplace that I would say didn't necessarily anticipate, kind of paralysis on making a decision. On the other side of that, I think there's people that are just waiting. There's a little bit of political uncertainty around the carbon tax and carbon price. Certain people wondering, will that be there? Because the avoided carbon price is actually a significant economic driver of decarbonization retrofits. So having full confidence that carbon tax will be in place long term is also creating a bit of an impediment, I think, to scale and speed. For all of our projects, we require that they receive IRE certification from the Canada Green Building Council. IRE certification, that stands for Investor Ready Energy Efficiency. It's a certification protocol that rests underneath the Investor Confidence Project, which was developed by the US Green Building Council and adopted by the Canada Green Building Council, established maybe 10, 11 years ago out of the state of California. It's largely unfamiliar to the market, and so we do recognize some friction in the project development stage. And so we're actually making some efforts with Canada Green Building Council in discussions on how we could promote it more widely, educate the market on the certification, the process for attaining it, and possibly even working to update and improve the certification. In the public sector, we're finding that while some are suggesting that the energy savings or shared savings agreements that are in the marketplace from our aggregators can be off balance sheet and not considered as long-term debt, affecting debt capacity limits. Public sector pretty broadly has been more conservative in their interpretations. And so taking on a decarbonization retrofit through the public sector competes with all of the other priorities and needs of the province, municipality, whoever it might be, in terms of appropriations and funding, everything else that they're responsible for funding. And that's also coupled with some procurement challenges on how to engage the market in developing retrofit projects, whereas I would say traditional procurement often is more like a one-for-one request, repair my roof or replace my existing boiler or furnace, and that's an easy thing to procure. Whereas in retrofits, you're really asking the market for solutions that attain a certain outcome, and you may not want to be specific in what you're asking for. You're asking for results, not necessarily individual measures, techniques, or equipment, and you would like the market to come up with those solutions. The MERB sector is proving itself to be a little bit challenging around in light of Canada's housing affordability crisis and high rents, and how can retrofits in the MERB sector pay for themselves from the operational cost savings, or will they result in increased rents by landlords in apartment buildings? And that's attracted the attention of certain renters' rights advocates. And so just something I think of note that requires careful navigation in the marketplace. This fifth bullet here is something I mentioned earlier around dollar per ton. So it's CIB's investment. So this is actually a loan sizing or an investment sizing metric for us as well, or as we evaluate potential carbon emissions being reduced from buildings, we need to divide those tons into the overall dollar amount and hopefully keep it within a certain range, which for us is $4,000 to $8,000 per ton. And so that I think is worth, I wanted to mention that only because it can be a little bit at odds with our primary priority, which is doing deep retrofit. So everybody knows the dynamic of the deeper the retrofit, the higher kind of incremental cost, the deeper you go. So we're trying to balance that proverbial harvesting the low-hanging fruit in retrofits, doing the lighting retrofits, the real easy, short payback stuff, and on balance, also including the longer payback with the shorter payback items to create an attractive or generate a retrofit that has attractive kind of project economics, both for us and for the building owner. In terms of where we're going, as mentioned, we've been around since March of 2021 in market with the initiative, and under our current funding envelope and corporate plan, we plan to be actively making investments until the end of our fiscal year 2024-2025, which is March 31st, 25, and then evaluate the state of the market at that point and what is the appropriate role for the Canada Infrastructure Bank to continue providing in the marketplace. Ideally, what we would like to see is a gradual exit where we're seeing more private sector investment into decarbonization retrofits. Hopefully that would happen through more kind of proof in the market, more evidence, broader understanding of the tactics and techniques that actually work to decarbonize buildings. And that dynamic would hopefully affect the kind of overall risk profile that private sector banks, institutional investors view in the space. And maybe last thing I'll say before we turn over to Q&A is I think we link that kind of market transformation to creating standards in the marketplace, most namely the IRE certification standard. One of the biggest benefits we see of that is that we've heard from financial institutions when they evaluate retrofit opportunities, they can get lost in long engineering studies and reports and don't know how to interpret the retrofits from that on that level. And so having a certification standard that is common and well understood, vetted by through a third party review, such as IRE, hopefully unlocks more private sector investment into the space. So with that, I will stop sharing my screen. And if anybody has infrastructure projects that they would like help accelerating, please don't hesitate to reach out, including, of course, decarbonization retrofits.
Excellent. Thanks so much, Aaron. So I've noticed a lot of questions in the chat. If you wouldn't mind just copying and pasting them over to the Q&A, it'll make sure your questions get asked. So we've actually had quite a few questions regarding who the funding is available to. So, and especially public sector, like can public sector participate in this funding? So do you want to talk a little bit about that?
Sure, happy to. So we are unable to make loans directly to public sector entities. So we can't lend money to a municipality or a province directly. So in order to make projects happen with the public sector, we would need to set up a special purpose vehicle where there would need to be private sector capital alongside our investment for the benefit of a public sector client. Public sector clients right now, though, do have access to our existing aggregator investments in the marketplace. So they could approach Johnson Controls, Ameresco, Sofiac, Efficiency Capital, and we have another wave of aggregators coming within the next 6 to 9 months. So there should be even more choice and more competition in the marketplace for both private and public sector clients.
Okay. And then what's the criteria for types of buildings you would invest? Because I think there was the 3 types of investment vehicles. Is it just commercial and office? I know you mentioned hospitals was one of the examples. What other types of buildings are you looking at? Is there a priority?
There's not necessarily a priority by building type. All buildings are eligible for our investment except for detached single family homes. We don't play in single family homes, but institutional buildings such as universities and hospitals, industrial buildings, commercial buildings that include office and MERBs, all of them are candidates and eligible. And really what's attractive is higher energy intensity or carbon energy intensity buildings that are going to help us meet the 2030 climate reduction goals, right? That's the big picture. Maybe something I didn't mention in the presentation is that we basically, as a matter of federal policy, the Building Retrofits Initiative is a piece of the puzzle in reaching the broader 2030 climate change goals.
Right. Yeah, that makes sense. Thank you. I'm going to try to lump together a couple of questions here. So one person was asking about the interest rates for loans. And then we have another question about whether interest rates are dependent on the levels of GHG reductions. how does that work?
Sure. So our interest rate pricing does vary with market interest rates. So we are held accountable to the government of Canada's borrowing rate because we are using federal government of Canada funds. And so when we launched, for example, interest rates were still ultra low, right? And everybody knows that we've transitioned into this higher, maybe more normal or healthy kind of interest rate environment, really to combat inflation and all of those things. So when we launched, I guess the second part of the question of calibrating interest rate to level of GHG reductions, that is something that we have always had in place, and we have found it to be actually pretty effective to nudge people above 50% GHG reduction on projects. So again, our minimum percentage reduction to be eligible for a project is 30%, and that a 30% forecasted GHG reduction would result in our highest interest rate. And so when we launched, for example, we were in a 1, 2, 3% sliding scale. Now we're more in the 2, 3, 4, or even 2.5, 3.5, 4.5, because the government of Canada borrowing rate is 3.5. So we slide up and down that scale based on the depth of carbon reduction, and any project that attains 50% or greater carbon reduction will receive the cheapest interest rate or best interest rate pricing.
Right. Yeah, that makes sense. Thank you. This is an interesting question about the IREE certification. I'm just wondering, again, why it's necessary, given that most of these retrofit projects are pretty big. They're done by qualified engineers, and a lot of the performance contracts might have insurance backing. So understanding that it's being used to de-risk the project, but there's also other mechanisms to do that sort of within the project. So can you just talk a little bit more, like given that perspective, why the IREE certification was so important?
Sure. So on the performance contracting and the fact that larger ESCOs sometimes guarantee the performance, there is a path. So within IREE, or the investor confidence projects, there's different, let's say, paths for different building types. So there's something that's like, there's like a small building or simple project, there's a large complex path, and there's actually a specific path for when there is a performance guarantee in place. And really, again, the value and importance is a standard in the marketplace that people can transact around, a common standard. And we're trying to set that standard because our overarching goal is really to transform the market into from the existing, let's say, traditional energy efficiency retrofits into decarbonization retrofits. And we think standards are important. And as I mentioned too, your average kind of banker or lender is not going to be familiar with engineering studies. And so really it's a normalization step or a standardization step, so that when lenders receive a retrofit opportunity on their desk and they're reviewing it, they become familiar with IRE certification that has 5 major components, has a nice cover page that lays out the project economics for them, the baseline emissions of the building, the forecasted reduction in operating costs, forecasted reduction in energy savings, forecasted reduction in GHG emissions. So it's a bit of a strategic choice of sorts to try to introduce a common standard in the marketplace, and that's why we chose it. It was the best we could find.
Right. Yeah. Great answer. Thank you, Aaron. So this one is, I think, a bit of an idea and a question just to float. So could some kind of mechanism contract of paying for retrofits over time through energy cost savings reduce the MERB market concerns about increasing rents to pay for the work?
Yes, for sure. And I think the what's important there is for how long. Like MERBs sometimes aren't the most energy intensive buildings. You also end up with split incentive challenges in the MERB market sometimes, right? Where tenants are paying for the utilities, heat and electricity, but the landlord needs to make the investment in the building. And then you get into the idea of green leases, often is discussed when it comes to the MERB sector. So you have to rewrite a lease to share in those savings. Essentially, your utility bills would go down if you're the tenant, and so, but the landlord needs to repay the investment into the building that they own. So that would result in increase of rents. hopefully sized within the reduction in utility bill savings. So a lot of it is a function of how long, right? And that's why we do try to stretch out our investments up to 25 years in total. So we offer all of our borrowers a 5-year availability period, we call it, which is essentially a line of credit where they can draw down on our facility to make investments in retrofits, a portfolio of them, and then repay that loan over up to 20 years. Now, I think the challenge is I think there's some particularly affordable housing MERBs that they actually need money amortized over a period longer than 20 years. And so that's one of our own challenges and constraints that we have. We are finding CMHC also has a pretty good long-term debt product for housing, the MLS Select product. And we're actually seeing our partnership with BMO that our retrofit construction loan with BMO is often being combined with a CMHC loan, MLS Select, and I think the amortization of those actually can go up to like 40 years.
Oh, wow.
But with a 10-year maturity. So that there's refinance risk 10 years down the road with that property.
Right. Okay. That's interesting because somebody had actually asked the question, what types, this is a separate question, but there is one about programs that exclusively target hard to reach lower class buildings. I know you do have some examples of Avenue Living, for example. I'm in Calgary, so I know that company. They are typically the sort of lower class buildings and they have access to CIB funding. Is that something that CIB would consider in the future, is to have a program specifically for those?
It is on our radar. And so we are evaluating, is it the appropriate role for the Canada Infrastructure Bank or someone like CMHC to really undertake the affordable housing challenge? Because it is a challenge. There's also an effort that the United Way is sponsoring, a task force that I sit on that is evaluating the Golden Mile, it's called, Toronto, which is a large or a significant amount of affordable housing towers that are in kind of dire need of renewal and retrofit. And so hopefully we can come up with a solution out of that task force.
Yeah, that'll be really interesting.
The affordable housing stuff.
That'll be interesting to keep an eye on. And then the second part of that question was, what types of buildings or portfolios have you seen access so far? Who's typically accessing these financing options?
I think there's a range. We have coverage. We have investments in universities and hospitals. We have some industrial clients through our aggregators. We have office buildings with Dream, and we have MERBs with them. So right now we see broad coverage in all the spaces, and that's intentional and strategic. Like, we do want to understand better through implementation which building types and sectors either provide better value for money metric, like dollar per ton, again, is really important that we're directing capital into the kind of highest value retrofit projects in terms of hitting the 2030 goals, but then also learning maybe about the MERB sector for the long term. So I'd say the jury's still out on like what are the best buildings, what are the best client types, like what type of either private sector client or public sector client is, I guess, most conducive to saying yes to doing a retrofit. So we're always keeping our eye on that, trying to learn and then make adjustments and improvements to what we're offering.
Right. Yeah. And so there have been a couple of there's always context shifts, right? Which is great to see that you're always keeping an eye on that. Somebody has mentioned the mandatory building performance standards that they've been enacted in Vancouver. Toronto just announced some. Montreal's working towards it. How does that shape the demand? Are you seeing increased demand for financing in markets like that?
I've yet to see it directly, but I think it's very obvious that a combination of carrots and sticks is what we're looking at here. I think New York City is probably maybe a great example of a jurisdiction implementing a penalty, pretty severe penalty. I think it's by 2025 or something like that. It's like $270 US per ton of emissions for the city of New York property. So, and then I also think as we've implemented maybe the carrot side or the solution side, right, we're helping to make investments in retrofit solution providers in terms of a matter of implementing policy that was mandatory compliance. It's good to do that on the heels of having a solution in the marketplace, right? So you're not creating a problem where people don't have a solution. So
Right.
I think that's how we fit into that type of municipal jurisdiction landscape of requiring and enforcing more stringent building codes and standards.
Right.
And frankly, the last thing I'd say on that, it'd be nice if we had a more cohesive federal codes and standards, right? Because that kind of fragmentation in the marketplace also presents itself as a challenge for implementing.
Absolutely. I think you're speaking to the choir on this webinar.
I figured.
Okay, so we've actually had quite a few people up with this question. So Martin's just mentioning the Toronto Western Hospital sewage heat recovery project that you mentioned and possible future extensions to other buildings. So are the funds available more generally for low carbon district energy initiatives, which do not necessarily involve reduction of building energy demand, but do reduce CO2 emissions?
So great question. Within our clean power group, we have made district energy investments. And so I coordinate fairly closely we are seeing actually, I would say, more interest in kind of district level strategies that include retrofitting buildings and implementation of district level systems. So it doesn't have to be an either or, it can be a both. But yes, we certainly have made investments in district energy decarbonization systems and can. And another thing on that, similarly, I think, is the relationship of buildings decarbonizing and becoming assets to grid decarbonization. So on-site battery storage, for example, right, that could actually feed back into the grid at peak times instead of displacing the need to turn on the gas peaker plants, right? The best example I have of that is in California. They have something called their Flex Market, which is the second summer of that program or initiative. And essentially it was in real time kind of utility company would send out a notification or a signal to buildings that were participating and say, if you can reduce your demand for electricity right now, they pay like a premium on the kilowatt hour price. So that's something too that we think about retrofitting buildings or the idea of smart buildings. Do we end up with these fully modernized smart buildings that not only decarbonize themselves, but also can help the grid decarbonize, particularly as we're transferring load from the transportation and building sector onto the grid, right? Like at the end of the day, that's why I use the word decarbonization. Like we are decarbonizing. Well, how do you do that? Primarily through fuel switching. Getting rid of stationary combustion of gas in a building is the way to decarbonize that building. There's all the supporting measures and the envelope, things like that. But so as we're transferring load, as buildings also help alleviate utility load constraints and challenges.
Okay, thank you. And it's interesting you touched on something that was a question in the question and answer box already is CIB or do the CIB programs address the side of retrofit GHG reduction challenges that have to do with grid capacity limits? Because electrification, we are going to hit some grid capacity limits if it happens too quickly.
Exactly. So, well, we do allow for actually within some of our investments, electricity only retrofits that actually in a clean grid province, relatively clean grid province, such as let's say Ontario, Quebec, we're not going to get strong GHG reduction numbers, but there can be very compelling economics to currently electrically heated buildings, particularly ones that are still running resistance, baseboard resistance, electric resistance heating loads like old apartments. So we do that. That's one way we've addressed that is like, as we're shifting more load onto the grid, can we also invest in already electrified buildings and just make them more efficient?
Okay, so we've got quite a few questions left in the QA. We're coming just about to time here. So I'm just going to encourage anybody, I'll have Erin, when we're getting closer to the end, I'll have you put the QR code up again and your contact information. There's been a couple people ask for that. But again, and I'll just encourage you, if you don't get your question answered today, please make sure that you contact CIB. They'd be more than happy to help you, especially if you have specific projects that you're interested in. So this is interesting. What kind of metrics are you looking at when financing projects from the perspective of a life cycle cost analysis? Sometimes traditional ROI doesn't make the best business case.
Right.
What are your thoughts on that?
Well, so embodied carbon, I think this question has to do with embodied carbon, like upstream life cycle analysis of the equipment being installed, possibly. And that it's on our radar. I guess our research led us to that kind of for your normal average retrofit, that there is not a like material significant level of embodied carbon in the equipment being installed or the insulation or recladding. On conversion retrofits, so we're seeing a fair amount of activity in converting old office buildings to residential buildings. In that instance, we're also noticing that the business as usual practice in the real estate and construction sectors would be to demolish the office building and construct a whole new condo building, let's say. And so in that instance, we think if we can make investments to preserve the existing concrete and steel of the office building and retrofit that building and turn it into residential units, that there is a significant avoided life cycle carbon calculation or embodied carbon, right? Because you're not replacing all that concrete and steel, which is typically the highest carbon intensive materials in a building. And so we're wrestling with that. We have a couple examples of those projects where we aren't exactly sure how to quantify that avoided carbon calculation, but we have some advisors and a team that's working on it.
Excellent, thank you.
I guess last thing I say, all of our investments though are across the bank, we do a full life cycle analysis of the GHG impacts of the project as a matter of policy. For retrofits, we've just again taken a position that it's not significant or material, and we're focused on the operating carbon emissions of the projects.
Okay. And what about in relation to NPV analysis? I think Matt was hoping to clarify that.
I think that is a pretty sophisticated calculation that really isn't on anybody's radar. It's cerebrally, it's there, it makes sense. I just don't think the market is evolved enough really where that is entering the conversation for people.
Interesting. Matt, if you want to reach out to Erin, Matt's with Efficiency Capital, so you guys could have a good chat about that, I'm sure.
I know Matt. Matt knows how to get in touch with me. So yeah, we can chat about that, Matt. And happy
could have a dull debate. I'm sure. So this question is specific to the IR certification again. Who prepares it? Is it building owners or is it the engineer developing the retrofit project?
Good question. Probably the engineer developing the project or the advisors to the building owner. So within the parlance and nomenclature of IRED, it would be the project developer, capital P, capital D. That project developer has to get their credentials with CIGBC, which is pretty easy. I think it's just like, are you a professional engineer? Are you qualified to do all of the calculations, engineering calculations required for a retrofit? Then it goes off to a quality assurance assessor, or Q, which can either be Canada Green Building Council or a private sector QAA, and they have a list of firms that have already qualified as a QAA. And then the third and final step, it gets reviewed and certified by Canada Green Building Council. So again, that's where we're trying to actually raise awareness of IRE and do some broader education and training modules for engineers, consultants, so that they have greater familiarity with IRE and can use it more effectively.
Great, thanks. Okay, so we're just about at time here. So we always close with this question. If you had to have people walk away with one message that you gave today, what would that be?
Please try to drive demand to our aggregators and help people do one of their buildings. Like just start with one, right? So I get a lot of people approaching us of like, oh, we want to do a whole portfolio and all the planning and all the stuff, and we want to do a big $50 million investment with you. And I had this conversation yesterday. I mean, it's almost daily I'm having it where I'm encouraging people to just try to pick one of their buildings, take action on that one building, learn the end-to-end process of the retrofit, see the proof and the evidence, and then do more. And I guess it goes back once time somebody said to me, well, how do you eat an elephant? One bite at a time, right? So I guess that would be the one thing that I would like to leave everybody with is that we need action in the marketplace. So this group of people today presumably are energy efficiency professionals or enthusiasts. And if they can encourage building owners, property managers, public sector clients to do whatever it takes to get one building decarbonized, I think we'd be well positioned to then move towards speed and scale to hit the 2030 and 24 goals that are pretty critical at this point.
Yeah. And I think that aggregators seem to be focusing on a portion of the market that has a hard time retrofitting, and those are Class B and C buildings if they're not owned by a large company. So yeah, awesome.
Exactly.
Thank you. So can I just get you to share the QR code one more time and throw up your
sure.
contact information while I close out? Thank you. So thank you everybody for joining today. We will have another webinar in 2 weeks with Dr. Laura Tozer from the University of Toronto. So I encourage you to go on our website and just check that out if you're interested. This presentation has been recorded, and we have a YouTube channel where all of the previous discoveries are housed. So if you're interested in seeing this again or catching the slides that you might have missed at the beginning, you can check our YouTube channel in about 2 weeks. And again, thank you so much. Happy Friday. I hope everybody has a wonderful, long Thanksgiving weekend. Thank you, Aaron, for coming today. We really appreciate it.
Thank you, Allison. And I guess for everybody, in terms of if they'd like to contact me directly, you would just put a Berg instead of investments into that email that's listed there.
Excellent. Okay. Thanks, everyone. Take care.